Are you having a hard time identifying fractal structure? Do you not know what fractal structure is, or do you simply want to understand how you can enter positions using it? Then this video is for you, because today we're going to be diving into the specifics of fractal structure, how you can identify it, and a full trade breakdown using my fractal entry model. Now, without further ado, let's dive in. Don't forget to leave a like and subscribe to the channel, and let's dive straight in. All right, so let's start with discussing what fractal structure actually is, because a lot of you know what the overall concept is of an uptrend and what the overall concept is of a downtrend, but what you actually sometimes forget to understand is that fractal structure is exactly that. Now, a lot of traders, when looking for positions, can identify the overall swing within a market. They understand that in this piece of price action, the overall market is trending in towards the downside, and that you have, for example, a break of structure over here, a break of structure over here, and let's say a break of structure over here, and a break of structure over here. So the overall swing trend is in towards the downside, and you're establishing new lower lows and new lower highs. But how can you actually capitalize on these overall swings with a mechanical entry model using that change of character? Because a change of character is actually exactly that, what I just explained, the overall swing structure, but then based on individual candlesticks. And I'm personally using the fractal structure break indicator. And by the way, if you're interested in this indicator, make sure to check out the link in the description of this video down below, as you can find the indicator over there. But looking here at the overall market structure, the fractal structure here is provided with the blue dotted line. So the current fractal low is going to be your low, and the current fractal high is going to be your high. And every single time you see a black line, that means that you have a fractal break in structure. Now, what you need to understand here is that the fractal low is going to be always the most recent low that broke a structural high, and your fractal high is going to be the most recent high that broke a structural low. Now, what does this actually look like? Well, what we can see over here is that we get a strong bearish candlestick in towards the downside, which breaks the most recent low, or the previous fractal low, and therefore the high of that bearish candle becomes your fractal high. Now then, what happens is that the market retraces, so we fail to break the fractal low, meaning that we're now trading in between the fractal high and the fractal low. And then on the next candle, what happens is that then we see an overall push in towards the downside, which again breaks the overall fractal low, which is the black line over here. As you can see, the most recent high then becomes your fractal high, which broke that fractal low. As simple as that. Now, how can we then start to take trades using this overall fractal structure according to like supply and demand, liquidity, and market structure concepts? Now, what we have here on the weekly time frame, first of all, is bearish market structure. What we can identify is a break of structure in towards the downside, this as our swing high, this is our swing low. So that's number one. We have confluence point number one, which is called MS, also known as market structure. Then if I dive into confluence point number two, we like to use liquidity. So liquidity is, very simply said, an overall area within the market where I expect there to be stop losses placed. And one of the easiest methods that I personally use to identify liquidity, because this blue line here is my liquidity high, is by looking for so-called bumps in the road within an overall impulse. So if I see this as the overall impulse in towards the downside, which caused a break of structure, I can identify this here as a little bump in the road, and I can identify this here as a little bump in the road. So this and this. Those are my liquidity points. However, we're now trading at this specific liquidity point, and therefore we'll be focusing on that one, because again, confluence point number two is going to be lick, also known as liquidity, and we can also tick off that box because we have bearish market structure and we've taken out that buy side liquidity in order for us to fuel that potential short in towards the downside. Now, furthermore, a different confluence point that I use is the private. Now, furthermore, a different confluence point. Now, furthermore, the third confluence point that I love using is also known as the PVD. So this is number three, PVD. This is very simply said, premium versus discount, Fibonacci retracement tool, where everything above the 0.5 fib is my premium from where I want to sell, and everything below the 0.5 fib is my discount from where I want to be looking for buys. So that confluence point has also me hit in favor of shorts, and therefore we can look for further downside pushes. Now, going down in towards the daily time frame, we can then see that we have an overall overextended push in towards the upside, from which or after which I expect a potential correction in towards the downside. Because look, here we had a break of structure down, here we have a break of structure up. Therefore, this here is my daily swing high, this here is my daily or this here is my daily swing high, and this here is my daily swing low. Now again, based on the daily time frame, we're trading at a premium, and we're therefore looking to trade from the premium back down in towards the discount. Especially after seeing a heavy overextended move coming into a liquidity high, it makes a lot of sense to look for a potential correction in towards the downside. Now the overall entry confirmation that I then love using is the fractal entry model, where I drop down to the 4-hour time frame and then once again identify the overextended push in towards the highs, and I identify that we've come above that overall weekly swing high, or that daily bump in the road, which was that liquidity point, and which is this dotted line over here, and we're then looking for that short position. However, the first time that we reacted to that overall swing high, you can see that the market started to push down lower, but at the fractal low at the time, and if we just press the replay tool over here, the fractal low at the time was positioned over here. And for that short position to play out, we needed the fractal low to break. However, if we use the replay tool, you can see that we came in towards this area of demand over here, which is this white box, and that the fractal low at the time remained respected, and from there we just simply pushed up higher, and that there therefore was no short opportunity to be taken. However, the next time we come into that liquidity high, and again we have the overall ascending correction in towards the highs, which is often a sign that the market wants to sell off, is that we then in that case did indeed break a fractal low. So that for me is then already pretty much the entry confirmation. Now I don't personally like selling on the very first fractal break. I want to be a little bit more conservative, so therefore I'm waiting for the next fractal break to occur. So as you can see here, we get another fractal break in towards the downside, and a double fractal break for me is definitely confirmation that I'm happy to look for a potential sell-off in towards the downside. Now other confluences for this short position here on the 4-hour time frame are the fact that we have ascending lows in the form of a trend line, and more specifically at the beginning of that trend line here we have 2 equal lows, and right underneath it a fresh imbalance candle, which is a demand zone where I potentially want to be trading towards, before then continuing the overall daily uptrend that we have in towards the highs, for example. So going back to that 4-hour time frame where I want to be taking that entry model, the overall entry model is again simply based on the fact that we grab higher time frame liquidity, that we see a double fractal break in towards the downside, and that we have the overall ascending correction after an overextended push in towards the highs. Now we're looking to target that liquidity for at least a 1 to 2 risk to reward, because the 1 to 2 risk to reward is my ideal risk to reward when taking these kind of positions. And you can see that after that overall fractal break in towards the downside, we form a buy for the sell, which is your supply zone. You can see that after the fractal break, we were traced back up in towards that supply zone. So let's say you wanted to wait for more entry confirmation. You could have also just entered on that supply zone. And then eventually the market heads down lower, back down in towards that liquidity point, which is positioned over here. You then get a 4-hour fractal break. Again, using the indicator, it simplifies it so much. This overall sell before the buy is then your demand zone. So let's say you want to be trading the other way around. After grabbing this sell side liquidity, you could also then place a buy position based on the 4-hour fractal structure, with your stop loss underneath the fractal low, targeting, let's say, a 1 to 2 risk to reward once again, because as we can see here very clearly, we have descending highs. We grab the sell side liquidity over here, and you get the 4-hour fractal entry confirmation. And again, the fractal structure is so simple, guys. Here we have the fractal low. This is the most recent low, which broke this previous fractal high. And you can see that that fractal low then gets respected. And from there, the market continued pushing up higher in towards RTP. So this is how you can trade the markets using liquidity, market structure, supply and demand, and simply said, the fractal entry model. So I hope this clears up a lot for you guys. If you want to use this indicator as well, make sure to check out the link in the description of this video. I hope you enjoyed this video, so make sure to leave a like and subscribe to the channel, and I'll see you in the next trade breakdown. Thanks, guys.